Welcome, ladies and gentlemen, to our next video. This is going to be a very important update. We're going to be going over the crack up boom has just started, and I'll define that for people that don't know. We also got news today that the unemployment rate has begun to tick up, mass layoffs have started, and the US dollar is tumbling. So go ahead and type 1 to make sure my mic is working today, because we don't want to repeat what happened yesterday. But we have a lot of news, facts, and data to get into today. It's going to be a very important episode because a lot of things just changed today, okay? So without further ado, everyone, the mic's working. Let's get straight into the news, the facts, and the data. So what is the definition of a crack up boom? And tell me if this sounds familiar. So type 2 if this sounds familiar, like what's happening now. A crack up boom is the crash of the credit and monetary system due to continual credit expansion and price increases that cannot be sustained long term. So I think we can tick that off, that there is continual credit expansion and we're still seeing massive price increases much higher than the Federal Reserve is admitting. The CPI is not showing the real inflation crisis. Also, in the face of excessive credit expansion, consumer inflation expectations accelerate to the point that money becomes worthless and the economic system crashes. Now, the second part has not happened yet. Money has not become worthless, but we need to use a bit of prophecy here. We need to do a bit of critical thinking, and we need to look for the first sign. The first is, we're seeing cracks in a monetary system, we're seeing the continued expansion of credit, and we're seeing price increases accelerate. So, like I always try to do, I try to tell you guys things that are going to happen in the future before they happen, before the mainstream media reports on it, because once it happens, it's too late. Okay, so that's why I know on social media, people like to make predictions and they want it to happen the next day, but it doesn't work like that. I'd much rather tell you something a year in advance so you have time to prepare. Because look at this. I'll go ahead and bring this up. The US dollar, this is the DXY index. We can see that absolutely tumbled today, and I'll get into why. But even over the week, over the past 5 days, it's gone from around 107 all the way down to 105. Okay? So the US dollar is losing a lot of purchasing power. At the same time, inflation is accelerating. So why did this happen? Well, it's all because of this report today. I'll go ahead and bring this up here. So US jobs data shows broad cooling after run of surprise strength. So October payroll rose 150,000 led by healthcare and government, but the unemployment rate unexpectedly climbed to an almost 2-year high. Now, unexpectedly, I've been showing you guys, I'm sure you're all aware, that we've seen huge layoffs, and that it was only a matter of time before the official unemployment rate ticks up. And thanks for that super chat there. Is it Fried Cash? Okay, interesting name there. But we all know that the unemployment rate was going to go up. Again, I try to tell people before it happens, and then I get called out, people saying it's not going to happen. It just takes a bit of time, people. So it says here, we can see this chart here. The latest figures suggest some cracks are beginning to form in the jobs market that has been gradually normalizing thanks to an improvement in labor supply over the past year and a tempering in pace of hiring. Also, maybe millions of illegal immigrants is helping the labor market to get that cheap labor in, what all those big corporations would be loving. So the rise in unemployment rate points to a pickup in layoffs, a development employers had so far broadly avoided. The survey of households showed more than 200,000 increase in those who have lost their job or completed a temporary one. So let us know if you guys have been part of one of these layoffs or have had your job completed. Thanks for that super chat there, Frank. BLS creating more BS. Yeah, that's the truth. Now, so again, the unemployment rate officially ticked up to 3.9%. So looking ahead, sustained setbacks in the labor market, the bedrock of consumer spending, and the broader economy risk raising concerns about the nation's ability to weather high interest rates without falling into recession. Now, what have I been telling you, everyone? When we look at history, when we look at the data, the facts, The US has never been able to avoid a recession in a rate hike cycle. Every single time the Federal Reserve has had to lift interest rates to stop inflation, especially this aggressively, there's always been a recession every single time. Now, who knows? Maybe they'll manipulate the data to say or change the definition of a recession. Maybe they'll say, look, there's only a recession when the unemployment rate's 10%, okay? And we have negative GDP of 5%. So if it's not that, maybe they'll say it's not a recession. So easing demand for workers is putting downward pressure on wage growth. This is why you guys feel like the cost of living is getting harder and harder and why you can't keep up. It's because wages aren't keeping up with inflation. So average hourly earnings only rose 0.2% last month and were up just 4.1% from a year earlier. Now, the core CPI is around 5%. And the real inflation is 10%, and that's why a 4% pay rise is not keeping up and why the cost of living is getting so much harder. So earnings for non-supervisory employees who make up the majority of the workforce increased 0.3% for a second month. Now, let's go to this. This is what I showed in my report yesterday. Wall Street loved this. And this is why the share of US national income by bottom 50% keeps on falling, because when they get this news that the unemployment rate is going to tick up, Wall Street rallies and the rich get richer while the poor and middle class get absolutely destroyed. And that's why the share of national income earned by bottom 50% is a one-way street. This is how the monetary system works, people. And we've got more bad news for the US consumer. Look at this. Americans panic surge give back car as subprime auto loan delinquencies erupt. Okay. Now, not only this, a lot of people overpaid massively for their cars. They got a lot of extra taxes and charges and fees added on their car. And yes, while normally used cars are underwater, now they're underwater 125 to 150%. And thanks for that super chat, Mickey. Appreciate it. So recent data from Edmunds reveals that an unprecedented 17% of American car purchasers now have a monthly car payment of $1,000 or more. Now, people, you shouldn't be doing this. I hope you're not part of this 17%. Unless you're earning $100,000, $200,000, even $100,000, you shouldn't be paying this much for a monthly car payment. And again, this is US, 1,000 US. There'll be much more in Australian dollars. Don't try to keep up with the Joneses. This is not the time to try to keep up with the Joneses. If you've got a brand new car and you're struggling, not financial advice, but I would do is I would sell that while I still could before prices crash even more, and try to pay off as much debt as I could, have an emergency fund, and then start investing, because things are going to get really, really tough. And, you can get a good, reliable car, maybe $5,000-$10,000. You don't need $1,000 car payment, and you try to pay that in cash. So this trend highlights the extent to which consumers, despite being financially stretched, are willing to take on massive auto debt in these uncertain economic times as macroeconomic headwinds pile up. Now we can see this search trend here. I'll go ahead and move myself so you can see it. This trend is accelerating and accelerating quick because, the cost of living is getting so bad. A lot of people are going to sell those fancy cars that they brought during the pandemic with the stimulus money to try to stay ahead. Also, listen to this. This is crazy. This is how you know it's worse than 2008. The percentage of subprime auto borrowers at least 60 days past due on their loans rose 6.11% in September, the highest data going back to 1994, according to Fitch Ratings. So I'll bring that chart up as well. So you can see this. This is now higher than 2008. It's just broke that. Americans struggle to afford car payments. Okay. So things are definitely not looking rosy like the Federal Reserve and like Joe Biden is saying. Things are getting worse. But wait, there's more, people. Even Target is admitting. Target CEOs say shoppers are pulling back even on groceries. And this is very unfortunate. The cost of living is getting so bad, people are having to go to other alternatives of food that may not be as good quality. And even the sad news, some people are having to skip meals, okay? This is very, very unfortunate, sad news, but it is happening and will get worse. So Target is doubling down on its cautious outlook as it prepares for the holiday shopping season. Be very interesting to see how this Christmas goes compared to last year. I do not think it will be as strong. So CEO Brian Cornell told CNBC that shoppers are pulling back on spending, even on groceries. And Target is taking a more conservative approach to inventory after last year's glut weighed on profits. So that's right. A lot of retailers, they thought that the spending boom would keep on going in 2023, but no. Obviously, there was going to be a spike in spending because of all the stimulus checks and a lot of people getting record amount of benefits, but that wasn't going to last. And unfortunately, a lot of these CEOs made a very silly decision. So on top of all this bad economic data that is getting worse, it is pointing to a huge recession and financial crisis that is coming. JP Morgan has now put out one of its biggest warnings yet. So look at this. The biggest threat to global order since the 1930s is underway, and every CEO is talking about it. And this is what I've been warning about. This has so much potential to make so many different black swan events that we can't even predict. But I'll go over some potential things that may happen. So, this may be the most dangerous time the world has seen in decades, JP Morgan CEO Jamie, some people call him Jamie Dimon, said in a statement that accompanied the bank's secret earnings release, recent earnings release. The bank CEO isn't the only corporate leader growing more worried about geopolitics. Kempe said at a CNBC Global Evolve on Thursday that many CEOs he talks with are increasingly worried about China, Russia, and the Middle East. Geopolitics is coming into the boardroom in a way it hasn't been in his life. And I completely agree, the geopolitical landscape on top of the economic landscape has never been so uncertain, has never been so bad. And the US does have reason to be worried because we just got this news out today. Hezbollah chief. So Hezbollah is the organization, the militant organization that's fighting Israel on Israel's northern border and Lebanon's southern border. And it says US directly responsible for Gaza atrocities and will soon pay a heavy price. Okay, so this is very, very worrying. We have a lot of illegal immigrants heading into the West. Who knows? There could be a lot of sleepers from Hezbollah, Hamas that may have slipped through the cracks, okay? And this is why we have to be worried, okay? We have to be vigilant. Like I said, crack up boom is at risk right now. US jobs data, the jobs market is getting worse. Share of national income is getting worse. Americans giving back their cars. Target is worried, and JP Morgan is worried. So everyone, there are still huge risks at play right now. You're definitely going to want to do everything you can to put yourself in the best position possible for yourself, okay? With the unemployment rate rising, you're definitely going to need to find another source of income. You can't just rely on one source of income. If you can, start a side hustle. If you don't know what to start a side hustle, unfortunately, you're going to have to try to find a way to make money on the side, whether by getting a second job. So that way, if you lose one source of income, you have another source of income. Don't be one of these people paying $1,000 for a car unless you know you're making multiple six figures a year. It's not a time to keep up with the Joneses. It's a time to pay off debt and, like I said, get some investments, because a lot of investments like gold, silver, Bitcoin, even stocks are going to melt up, because I think the Federal Reserve will not stop inflation. So what do you all think about this? Let me know down below. You're awesome. I'll see you all in the next video.